In today's video, we're going to talk about one of the favorite setups of short-term traders in the marketplace and how potentially to take advantage of that. As traders, we need to be ready for the next large move in the market. Now, the market doesn't always set up the way we want as traders. Sometimes large moves happen out of nowhere and there's no good risk-reward trade. But one of experienced traders' favorite setups by far is after the market has made a large move and then the ranges start to compress and the market starts to move sideways and starts to build energy. When we call that consolidation. It's characterized by sideways movement where there's a top of a range that gets established and a bottom of a range. And the longer that period of consolidation goes on, the better the break from that consolidation will be. So we're now more than a week into this consolidation period. The market bottomed. There was a huge amount of negativity again. We had a nice bounce. And after that bounce, we failed to move higher. We started to roll over, but then we failed to break lower. And now I think we're probably about 7 days into this consolidation. And for my purposes, I want to look at the Qs, the NASDAQ 100. That's going to be my focus. Tomorrow, the CPI number is coming out for May 2022. It's unlikely this consolidation will continue past tomorrow. We will break one way or the other. One of the more common things that you can do in this situation, when you're expecting a break, based on a very important news item. And why is this news item important, the CPI? Because one of the major factors, if not the major factor causing the market to sell off in 2022 is the inflation going really high, multi-decade highs, and then the Federal Reserve having to raise interest rates to help bring that down, tame the economy, slow down spending, price pressures, and as people start to spend less, as interest rates go higher, and things slow down, then the Fed can take their foot off the brakes and stop raising rates. And one of the things they look at are what are the inflation data. So when that number comes out, if we get a lower number than expected, the market is going to anticipate the Fed stop, no longer raising rates, maybe by Q4. And people will start buying stocks. That's good for stocks. And so if we get a CPI number that's lower than expected, I would expect a strong breakout to the upside. And one of the ways to play that is just to buy calls that expire tomorrow. The range has been basically 305 by 310, 312 on the upside on the Qs, where today, as I'm talking to you, we're between 305 at the lows today, 308, 309 at the high, something like that. You could just buy the 310 calls for tomorrow, and if that number comes in lower than expected, we could move to 315, even 320. It could be a crazy move. Now, the question is, if the CPI number comes in higher than expected, will we tank? Well, we're already set up in a consolidation, so most likely we will break to the downside. But if we have put in the bottom, at least the short to medium term bottom in the market overall, which is very possible, strong possibility, we may see lower prices later in the year. But for now, if we put in the low and that number comes in higher than expected, the knee-jerk reaction would be a break to the downside. And now we've had examples of negative catalysts over the last week or so. We had Microsoft warning, we had Target warning for the second time in as little as a month. And these negative things that have come out have been shaken off. Another great example, Nvidia, one of the probably top 5 or 6 biggest names in the Qs that we're talking about here, they gave weak guidance for next quarter. Remember, the initial reaction in the after hours for Nvidia was it traded lower. And I think I tweeted at the time, if Nvidia trades positive tomorrow, like the bottom's in. And it did trade positive the next day, and we had a really nice bounce in the market overall. And so we already have some indications that the market has priced in a lot of negative news. And so my expectation would be if it's a bad inflation number, we definitely will see selling pressure, but it's possible that it could get shaken off. But what you could do is buy puts for tomorrow as well. And if we break to the downside, you can make some money there. Now, the way to do this in a way where I wouldn't want to risk as much playing a downside break. So let's say we're 308 on the Qs. Maybe I'd buy something like 302s, something. I wouldn't want to spend a lot of money. I'm willing to lose more money on the call side on this trade because I think if we break to the upside, it's just going to be, it could be vicious. And the last time, we showed signs of consolidation and a break, I think it was a break to the downside maybe a month or two ago, where we're going up and down. But these were from higher prices, much higher prices. And we're now down at lower levels where I feel better about an upside break. And so those are my thoughts. Let's see what the number is tomorrow. If it's in line, all bets are off. Maybe we'll have a fake break one way or the other. But I'm very interested to see if that CPI number comes in lower than expected, because that means the top numbers for inflation are in, and people will start to look towards the Fed next week and the Fed announcement and the press conference, et cetera. Good luck.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.